go, here we go. Yeah, at the top of the class on a roll. Hey, and it's time to run it up. Yeah, you know. Yeah, mask down, put the pedal to the floor. Yeah, on a roll, here we go, here we go.
What is going on, everybody? Welcome back to the channel. And in today's video, I want to go over the CBBI, or the Bitcoin Bull Run Index. As you guys know, we have made some videos about this in the past, but I do just want to touch back on the Bitcoin Bull Run Index as things have changed. We're a little deeper into the bear market, and the CBBI number is getting pretty low, indicating that we could be getting pretty close to the bottom. And if not, the bottom may already be in. But before we get into it, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of the tutorials or urgent market updates that we upload to the channel. Now, if you have not watched our first video on the CBBI, definitely go ahead and check it. I will link it in the card above. In that video, we kind of just explained what the CBBI is and what different metrics go into the actual calculation of the CBBI score. I've been getting a lot of people asking me on the live streams, hey, Frankie Candles, should I be DCAing into the market? Are we going to get another big leg down? And I'm going to try to clear some of that up now by looking at some of these metrics, because as you guys know, there are some things flashing on the charts that could indicate that we've already bottomed. But I will say this, if we have not put in a bottom for this bear market just yet, I do think we're getting a little bit close. So without further ado, let's go ahead and jump in and take a look at the Bitcoin Bull Run Index. So here we are on the CBBI. If you guys have never heard of this, you could just Google CBBI or Bitcoin Bull Run Index. It should pop up, but I'm not going to explain what this is. Again, if you have not seen our original video explaining the CBBI, I'll go ahead and drop that link in the description down below. But as you guys can see here, the CBBI is now reading at a 5. The CBBI does range from between 0 and 100. If it is reading 100, it would indicate that we're 100% confident that we're at the peak. And if it goes all the way to 0, it means that you're 0% confident that you're at the peak. So coming down to this low number of a 5, you start to wonder like, hey, we must be getting pretty close to the bottom if we have not already bottomed out. Let's go ahead and come down here and just take a look. Over here in 2013, we did top out at about a 99 on the CBBI. In 2017, we actually topped out at 100, and you can see it's real nice. We have this heat map. The dark red is usually a good time to sell, and that dark green is usually a good time to buy. And in this cycle, you could see we actually only topped out at about an 83. Now we're getting a reading of 5. Now, this is getting close to the previous bear markets. If we go back to 2017, we actually bottomed out at a 3. And if we come all the way down here to 2015, we actually bottomed out at a 0. So bottoming out in 2018 at a 3 and now being at a 5 here, I am starting to expect the bottom, if not already in, has got to be pretty close. Let's go ahead and go over some of the metrics we have here. This is one thing I absolutely love about the CBBI, is that they actually give you the metrics that go into the calculation of this chart. The first metric we're going to go over is going to be the new pool, which is basically net unrealized profit and loss. And if we come down here, you can see it gives you a nice little indicator overview. We went over this in my previous video, but this indicator is derived from market value and realized value, which can be defined as, and then it gives you all the definitions of market value, realized value, and it's really, really good to actually understand what goes into this stuff. But if we scroll down here, you can look at how to view the chart, which is really nice. It says the key principle of this tool is in the ratio between market cap and Bitcoin investors taking profit. When market cap rises much faster than profit taking, we see that the market is overheating. One could say due to investor greed, which is represented by the red band. For the strategic investor, such times have historically been favorable to take profit. And then if you come down here, it says Bitcoin price prediction. Using this tool, it kind of tells you how you can use it actually. And it says net unrealized profit and loss, or new pool, is able to use market participation data to help predict Bitcoin price reaching major highs or lows. It uses on-chain data to demonstrate potential market participation emotions at a given moment in time, which can be useful for forecasting the Bitcoin price and where it might move next over time. You can see historically, when you get up into this euphoria/greed phase, it has typically been a good time to take profit. In 2013, as we hit that all-time high, you could see that net unrealized profit and loss all the way up here in the euphoria and greed section, this red area. And, this would have been alarming you like, hey, it might be a good time to take some profit. And you could see even on that first top that we got in 2013, we actually came all the way up into the euphoria and greed section. So you could have rode this up, saw this peak into the red, sold, and then bought the dip again, and then rode it back into the red. Now, obviously, hindsight is always 2020, but it is very interesting to go back and look at this information. And you can see we actually have a few different areas here. In the green, you have capitulation. If you are accumulating any place in this green box, it has typically been a pretty good time to buy Bitcoin. Above that, you have hope/fear, right? And then you have optimism/anxiety, belief/denial, and then euphoria/greed. Now, looking at our current situation right now, we are actually in the capitulation zone, this green box, which obviously has historically been a very, very good time to buy Bitcoin. So for a lot of you guys out there that are looking for the answer, should I be DCAing into the market? According to the new pool chart, right now, we are historically in a very good time to buy Bitcoin. Now, this isn't financial advice. I'm just showing you guys some of the things that I look at when I am looking to DCA into the market. And I will tell you this, I am currently DCAing into the market. And this is a good indicator that we are in at least a decent situation to start DCAing into the market. So the new pool chart is always a really good thing to keep an eye on. And you could see even in our 2021 peak here, you could see that new pool line actually came up and just kissed that level before crashing down. Long story short, when the new pool line gets into the red, you'll want to sell. And when it gets into the green, you want to buy. If you want to break it down into simple terms. And right now, we're in the green. Now, coming back to the CBBI, I want to look at another metric here, and that is going to be the 200-year moving average. Now, I actually covered this in our previous video. You could see here, 2-year moving average multiplier. Now, I went over this in my original video and kind of explained what this is. It's a 2-year moving average and then a multiple of a 2-year moving average, which basically gives you these two lines. You have a green line and a red line. Now, obviously, historically, if we go back to the 2017 markets, when you came and crossed the red line, which is the 5x multiple of the 2-year moving average, when you cross above this red line, it is typically a good time to take some profit. And on the contrary, when you dip below that green line, it's typically a good time to buy Bitcoin. Now, if we zoom back out, you can see, right? If you were buying down here and selling up here, you would have been getting a pretty good deal, right? You're buying at about $2 and then you're riding it all the way up here and selling at 973, right? Or you're coming up here and selling it at 132. Either way, you're making a massive gain and making a good decision by buying in the green and selling in the red. Now, coming to the 2015 bear market, you can see if you were buying these lows when you were below this moving average and selling at the highs over here, you would have been buying, maybe you bought some at 229, then you bought some at 227, then you bought some at 245, and then you bought some at 244, and then you even maybe bought some at 317. Either way, that's the beauty of DCAing, because when you're up here, between 10K and 19, 20K, you're getting some crazy, crazy gains. In the 2018, you can see here, we never actually peaked into the red, which is why I always recommend you don't just want to trade based off of one thing, right? We never broke over this moving average, so you would have never really got the signal to sell. But with other things that you could have been looking at, you could have gotten some good ideas that it might have been a decent time to at least take some profit. But just remember, a lot of people got tripped up in this previous bull run that we just went through. No one was expecting it to top out at this price. Most people thought it would go a little bit higher, with the exception of a few people, but you can see that we never broke that moving average. But if you were buying down here and you were able to sell as you got really close, right? Maybe you're thinking, oh, I'm getting close, it might be a good time to sell. You would have been buying, at an average of about $4,000, and you would have been selling at about $60,000. Now, if we actually zoom in on our current cycle here, you can see that we are currently below this green line in the green shaded area, which, you guessed it, historically has been the best time to buy. It's pretty simple to see, right? When you're below the moving average, you buy. When you're above this moving average, you sell, right? Now, it's a lot easier said than done, but a lot of people are asking, again, should I be DCAing into the market? And according to the 2-year moving average chart that we're looking at right now, you are in the green, So that is another check mark for being a really good time to DCA into the market. Now, I want to take a look at one more metric here, and that's going to be the MVRV Z-score. So if we come over to this chart, I do just want to explain it real quickly. So if you come down here to the how it can be used section, you can see the MVRV Z-score has historically been very effective in identifying periods where market value is moving unusually high above realized value. These periods are highlighted by the Z-score, which is this red line that you see on the chart, entering into the pink box and indicates the top of market cycles. It has been able to pick the market high of each cycle within 2 weeks. It also shows when the market value is far below its realized value, which is what we're looking for, highlighted by the Z-score, again, that red line. Entering the green box, buying Bitcoin during these periods have historically produced outsized returns. Now, coming up to the chart, you can kind of see here, I'm going to try not to cover it with my head. You can see the Z-score line again here in red. Right here, you can see we absolutely shot into the red box, indicating that the market top was coming in, and we did top out in that 2013 cycle right at that time, and then came down into the bear market. And I want you to notice something here. In the bear market, you could see as we came down, we actually dipped into this green box, and this is the historically good time to buy Bitcoin area that I was talking about in the description here. And if you were buying in this green box, you would have been buying the bottom of the bear market, right? It's pretty simple to see, guys, right? You peak up, the red line hits the red box. That's typically the peak of the market. And then you come down into a bear market. You either go into the green box or slightly below. You can actually see at the bottom of every bear market, if you look very closely, we've actually peaked out of this green box just a tiny bit. But if you're buying in this green box, right, you're buying right here, which is the bear market, the bottom of the bear market, and then you're riding it up to the next cycle, and then you're seeing it hit into the red, you're selling, and then it got pretty close to the green here, right? But this was in the same cycle. You had two tops in this cycle. You got pretty close to the green. Might have been a good time to start accumulating, but you didn't get fully into that green box. But then you finally come up, hit the red box again. That's the top of that cycle. And then you come into the bear market, and would you look at that, the bottom of this bear market lines up with us being down here, peeking out of that green zone that you can see there barely. But if you were buying anywhere inside of this green box, you were buying the bottom of the bear market and then riding it all the way until you see the new pool line hit that red box, and boom, that was the peak of the 2017 bull market at about $20,000. And then, that would have been your signal to sell, and you would have wrote it down, and you would have waited until you got back into the green, right? And then that green area would be the best time to buy historically, right? And if you're buying down here while the Z-score line is in the green, you would have been buying the bottom of this bear market, and you would have rode it all the way up until you came in and touched that red line again, which called the top almost perfectly right here in 2021. And now we are currently sitting right inside this green box. So once again, people ask me, should I be DCAing into the market or are we going lower? I just point them to this information. Here's a third thing that is pointing towards right now being at least a decent time to start DCAing. Could you potentially buy here and then this actually comes down a little bit more and you peek out of the green box? Of course, but that might not happen too, right? Nothing is 100%, especially in crypto. So you might wait until you peek out of the bottom of the box and then it never happens, and then you're waiting for that dip to happen and it's never going to come, and you're going to wind up buying on the way up, and that is literally the opposite of what you want to do. You want to buy on the way down. So right now, the MVRV Z-score chart is letting you know that we are in the best time to buy Bitcoin. And on top of that, guys, just looking at the entire CBBI score of a 5 is getting eerily close to where our last bottom was at a 3. And you want to remember, we're dealing with things such as the market maturing, right? Or logarithmic regression, where you're going to see less explosive highs and less explosive lows as the market matures and more money enters the market, making it a little bit more stable over time, right? Because you can notice right here, we bottomed at a 0. In the next cycle, we bottomed at a 3. These things can fluctuate. Just because we hit a 3 in 2018 doesn't mean that we have to hit a 4 in this cycle. But the fact that we're in the single digits, guys, sitting at a 5, it's probably, for me, it's not a bad time to start DCAing into the market if you have not been already. And that is exactly what I'm doing. This is not financial advice. I'm just showing you guys what I look at and what I am doing. And due to these 3 reasons that we just looked at, as well as a plethora of other things, such as being below the 200-week moving average, having the money flow in the red on the weekly on Market Cypher B, these have all been historically the best times to buy Bitcoin. So all of these added up together has got me DCAing into the market. And even if you're just looking at this chart as a whole, you can see, right? Like, we're pretty dark in the green here. If you were buying in the dark green over here, you would have been buying the bottom of the bear market. Same deal over here. And, same deal over here. You got pretty dark green down here. So, guys, I think that's all I have for this video. Again, I just wanted to answer the question that I've been getting so often, especially since this bear market has started. And that is, should I be DCAing into the market? And here are 3 charts that are pointing to us being historically in the best time to buy Bitcoin. And again, looking at that CBBI at a level 5 is got me feeling pretty bottomy. If the bottom is not already in, I think it is close. I think we could potentially hit it in the next few months, if not sooner. So I hope you guys learned something. I hope I was able to clear some of that up. I know everybody's kind of like maybe holding some cash, waiting for that second shoe to drop. What I say is DCAN, because if you wait for the bottom and it doesn't come, you're going to wind up buying on the way up, and you don't want to be that guy. So with all that being said, guys, I think that's all I got for this video. I'll see you in the next one. Frankie Candles out.